Okay, welcome to the weekly meeting for 19/25. Okay, so I wanted to cover a couple of trade setups that I see. And we can go over a couple that you guys see afterwards. But the 3-week candle just closed, and on some pairs is not giving us a whole lot, and in other pairs it's giving us a little bit more. I'm still short on these ones that wicked these old swing highs, but as far as when I drop down in time frame, if I drop from the 3-week to the 1 week, I used to trade candlesticks, and this pattern right here would be the shooting star or evening star or whatever you want to call it. So I expect to sell. So basically, if I look at this from just a weekly closure, this is like a bearish OB. I expect price to pull back up, probably filling this gap right here and then sell from there. If I'm just looking at this in terms of a pip count, it's a pretty decent pip count to buy back up and to sell down. So the further I drop down, I would look for a reason to catch a buy trade going back up. On this daily, it didn't give me a daily bullish order block. So that daily doesn't necessarily work. Neither really does this 12-hour. So maybe the 8-hour is where I'm going to get my bullish candle. So I would want to see it pull back a little bit. And then I would expect to see this trade start buying back up. And of course, I would have to start off by fibbing that weekly candle to get my buy back up range for the sell down. But that is in a nutshell how I would analyze a pair that's outside of the order block range or whatever. So that's EUR NZD. I think GBP NZD is pretty much the same setup. GBP NZD. Yeah, so GBP NZD is the same setup. It has a nice gap right here, though, where I expect to pull down and then the trade to buy back up to this imbalance before it goes south. But it's the same setup on the 3-week. If you look at the 3-week, this actually gives you a bearish order block. But if you drop down to the 1-week, you're just trading this pullback to sell down. I personally like the GN setup over the EN setup, but they both work and they both look very similar. Okay, let's talk favorite setups. Not my favorite setup, but your favorite setup. Have y'all looked at the charts at the start of this week?
Yep.
Like you, Jay. I probably wouldn't trade it, but I do like it the best
No,
how it looks.
I like UJ too. And I like the 10-year along with UJ. 10 years about to go up, which means the dollar should go up. And I think any of those UJ, UF, I like UF too. USD, CHF. I like UJ, and I like GJ to go the opposite direction to sell. So I guess we can look at UJ.
I was looking at UChef on the 3-week. Don't we need to wait for the 3-week liquidity?
I'm looking at Cash App too.
All right, we'll talk about UChef in a minute, but
Mhm.
this is a 3-week UJ, right? So we'll go get a new candle start. It will either push down and take out the bottom of this candle, or it won't. But here's the thing that I like about these trades. If I just take this trade and do a pip count back up to the wick of the 3-week candle, it's telling me basically I have 445 pips to close this imbalance, right? If it's going to close the imbalance. If I go down to the 4-hour chart and I'm just looking for where my imbalance is, again, if we take out liquidity, it's better. But if not, if we just pull back a little bit, we're looking at about 380 pips back up to this imbalance. So I don't care when I decide to get in this trade. You know, whatever your go signal is, like some of y'all are like me, you want to see it take out the low and then start buying. But let's just say it doesn't take out the low and you just get a bullish order block and price pulls back down into that bullish order block and then you pick up the buy. It's still plenty of pips. You know, I think the most difficult thing for some of y'all is, hey, my entry, when do I enter? You know, you're scared to pull the trigger. And I get it, because there's no standard answer, right? You enter when you see liquidity get taken, or when you see you get a chalk or a market structure shift in your zone. There's always going to be liquidity taken. It's just what level of liquidity gets ran. And that's probably what keeps people on edge when it comes to taking a trade. But if you embrace, hedging, or you embrace your philosophy, right? Like if you only get in this trade if it takes out this low, then you'll never have to worry about it, because if this trade gives you a bullish order block and takes off, you'll just turn the page and go to the next trade. There's nothing wrong with doing that. But there's also nothing wrong with adjusting for the level of liquidity. So if you see that this is a 4-hour bullish OB and price comes down, basically taps in, and then it gives you all this liquidity, and now we dip below that level of liquidity, then you can't be mad at yourself if you take a trade because it took that internal liquidity. Okay. So once it takes the liquidity, if you decide to get into the trade, you have to be okay with that, like as a trader. And you shouldn't get into the trade because I get into the trade, or because TT or Kim or somebody else gets in the trade. You have to be solid on your own accord. And that will help you when it comes to calling your own trades. And generally speaking, if you wait and you only enter during kill zone times, you'll probably have a higher level of success when it comes to your entries. So that's the piece of advice I can kind of give to you on that. But I like the UJ trade setup. Again, I like all those USD trade setups, but that's the UJ setup. Let's talk about the
Really quick.
Huh?
When you talk about the liquidity to be taken for the Asian pairs, that would mean
this is not a Asian pair or US pair specific. Liquidity is liquidity. The Asian kill zone is also going to have liquidity get ran. And the truth of the matter is, many traders will never enter a trade during the Asian kill zone time. They're only going to enter on New York, or they're only going to enter on London. But every session is going to give you an entry. So you're going to run some form of liquidity, whether it's internal or external on your different time frame. So there's plenty of times where GA or GN will give you an Asian entry. And I'll see the entry and I don't call the trade because I'm going to enter on London. And it still takes out either the Asian high or some internal liquidity that happened on the Asian session. For instance, let's say we had
Oh, okay.
a bearish order block on the Asian session, right? And during that Asian session, this could be in the bracket, like in the Asian session bracket. Am I confused? I don't want to confuse people.
No, I hear you.
But let's just say we're on the Asian session, and Asian session gives us an entry. And we come out of that session, and then all of a sudden we push back up and we get the imbalance filled on Asian session for the trade to continue. This happens often, I just don't typically call a trade on Asian session. And primarily for two reasons, right? I believe you can find consistency looking for trade setups every Tuesday, right? And I trade London session, so I think you can be successful taking a trade on that session. Many times before that session, I'll see a trade take place. Sometimes it'll happen on the Asian session. Sometimes it'll happen on the day before Tuesday, but I won't call the trade. Does that make sense?
Yes.
So all I'm saying is, even if you get an entry on Asian session, like if this was your entry or this was your entry down here at 1930, you see how this pulled down and gave you a buy entry, and you could have bought up. Even if that was your entry, you'll come back up here and it'll pull down and they give you another entry to keep buying. You just have to be solid on your entry time. Yeah, you missed that run during Asian session, but it comes back and it gives you an opportunity to get back in the trade to go up. You just have to be solid on, hey, I'm not looking for the trade during Asian. I'm not worried about that piece of it. I'll get the next entry on the next session or whatever. And I think a lot
Okay,
of
so it
times,
doesn't matter if it's an Asian pair.
no, it doesn't, because it's going to give you an entry whenever. A lot of times
Okay.
the JPYs will move on Asian session, but they'll still give you an entry on London and or New York. So,
Gotcha.
I think that the better or the more solid you get with trading, you'll be able to look at your chart and see when your setup is lining up. For instance, if you get a bullish order block, 4-hour type, at the close of New York session, there's probably a good bet that the next 4-hour candle is going to pull down into that order block, and you'll get a entry on Asian session to continue higher. Does that make sense?
Yes.
Yeah. So if you're an Asian session trader and you do well with your entries on Asian session, I would say you could probably always find good trade setups on Asian session. The same way, if you're a London trader and you generally look for your entries on London session, you can always find a good setup. And the higher the time frame that you trade, to me, the more routine that your entries can become. It's a reason why I can pick a trade every Tuesday. It doesn't have to be the same trade. It's not that I'm catching GN every Tuesday night, but I'm catching some trade every Tuesday to give me 100 pips. And it's just because I'm trading off of a higher time frame, off that weekly time frame. Okay, does anybody else have any questions? All right, let's talk about this U-Chef trade, okay? So again, a 3-week bearish order block, but I'll just call your attention to this 4-hour bullish order block that happened on Wednesday. All right, the market pushed up into this bearish order block, and now it's pulling back down, right? All I did was drop to the 15-minute time frame and look for the imbalance. And this is where I would like for this trade to mosey down to before I get in for the long, right? And the long is based off of the same as that UJ trade, right? We get this huge 3-week chart. Now, based on where my entry is, I don't anticipate us running this low, right? It doesn't mean that we will not run the low. I just don't anticipate us running that low.
Why?
Why don't I?
Mm-hmm.
Well, I just
Because isn't that what we're waiting for?
well, again, if you're the type of person that only takes a trade if we run this low, then that's what you would not enter right here. I'm not that type of person. I'm going to see what happens. I have an alert set, right? You see my alert set right here? I'm interested in seeing what I get right here, because if I'm just blindly waiting for this low to get ran, what if this trade turns and pushes up and just starts buying? Then I miss this great opportunity to catch 334 pips. Does that make sense?
Yeah, but I thought the 3 week was like wait for the liquidity to be taken first.
You can. You can absolutely do that. But what I'm telling you is it doesn't always happen like that.
Right.
It doesn't the liquidity is not always going to get ran before your move. You have to be flexible as a trader. And some people aren't flexible. Some people are not flexible. And they say, hey, you know what? I'm only going to do this if it gives me this liquidity run, right? There's nothing wrong with that. There's nothing wrong with saying I'm only going to get into the buy if this liquidity gets ran. There's plenty of trade setups that I've done that to. But what I'm saying, I'm not telling you I'm calling a buy trade as soon as this alarm goes off. But I see the market, like I see the structure of what needs to happen in the market, right? Like everything down here, right? All this could be liquidity building up. All of that could be liquidity building up. But what I know for sure is we haven't broke this order block, right? We haven't reacted from this 4-hour order block. So I'm aware that there's an imbalance that needs to be filled. What if we just fill this imbalance and go up a little bit and then fall back down? So I'm just saying that there is a possibility that this trade could hit this imbalance and start buying. That's absolutely possible. Now, whether you enter and you take that buy or not, that's really different. Does that make sense? Generally speaking, this setup doesn't affect me anyway, because if it hits this thing and starts buying, that's going to be a Sunday night trade. I'm not calling that trade regardless. I'm just watching the market and I'm seeing what the possibilities. Does that make sense?
Yeah.
I'm not telling you to take this trade. I'm pointing it out in case people are interested in taking this trade. It's the same way with the UJ trade. And you know, I don't know. Maybe you're on a hot streak, or you're catching great setups on Sunday and Monday. But what I can tell you is sometimes, you know, your Sunday and Monday will ruin the rest of your week. So what if you get in this trade for a buy and it goes up a little bit and then it falls back down and takes out this low? And then on Tuesday, we get the buy set up. So I would wait until Tuesday, because it shakes out the false moves in the market.
Mm-hmm.
But this is still a good trade setup. USD Chef, USD JPY is another, to me, great trade setup that could take out that low, but again, it's protected by the 4-hour order block at this point. So if you're waiting for those trades, you could save yourself some trouble by waiting until Tuesday. Maybe we don't get an actual move until Tuesday. You know, I think that it's worth the wait, in my opinion. You know, I don't know how anybody else trades, and I'm not just trying to assume that my way is the only way to do it, because that's not what I'm saying. But when I look at all these trade setups, you know, like to me, we get a chalk right here, we get a pullback, and we're right here at these lows. So all these trades could just take off and start buying. Or they could push lower and break the low and start buying. And here's the best case scenario, in my opinion. What if that first hour candle, the market pushes down? Or what if the market gaps down past that low? Then everything is taken care of, right? Because you don't have to guess.
Right.
And this trade can just sail down into this imbalance and then bounce. And then you got the buy back up. So a lot of what we discussed on these weekend calls turns into fodder, especially lately with all these gaps. Because if the market gaps down, then it has to trade back up to us anyway. And sometimes those are the best case scenarios, and it takes the decision out of your hand. But in an environment where you absolutely have to make a decision, I think you just have to look at your market structure, and you have to wait to see how the trade reacts at your key levels.
Mm-hmm. So what is the dollar doing? The DXY.
Well, I think we talked about the 10-year having a bullish order block on it. I think the Dixie is about the same way that all these other pairs are. It needs to buy back up. Is it going to take out the low, or is it going to just push back up? I think there's no question that the dollar is selling. And it kind of, it goes back to what I thought in December, but we didn't get the bearish order block on the 3-month. So I just couldn't trade the JPYs down. But now it's fairly obvious that the dollar's tanking. So I expected to do the same thing that UJ and you, Chef, and all of them to buy in order to start selling. And I think the 10-year tells us the same thing. The 10-year has a bullish weekly order block on it. So I expect that thing to buy up at some point. Maybe we get this buy up on Tuesday. Maybe it pushes down first, and then we get the buy up. But I think these are pretty straightforward trades that are going to be available to us once the market starts to move in that direction. I do think that, just from my experience, that we should expect the market to try to shake people out. Normally, the market is not just going to give you a 400 pip straight move. It's going to shake people out first. So I expect to have some trickery. I'm not jumping in that trade on Sunday trying to buy it straight up or whatever. That's why I call the trades when I call them, because I believe if you let the market shake itself out, you can get a pretty clean run, on the second leg of the power of 3.
Right.
So does anybody else have setups that they are wanting to see play out, or they need help breaking down? Nobody.
That Euro USD looking like the exact opposite, right?
Chef,
Yeah, Euro USD is the exact opposite of
can you hear me, Todd?
yeah, I can hear
You
you.
should. Yeah.
Cash, Chef.
Kenya said G Chef and CJ.
Well, yeah, I
I said
like
Cash,
Chef,
Chef.
but I mean, off the top of my head, Cash Chef is going to be trash compared to USD Chef.
Well, I don't know if she's talking about Cat. Oh no, she's talking about Cat Chef JPY or Cat JPY.
So listen, Cash Chef, look at your pip count on Cash Chef. From where it is now to the golden zone is 124 pips. It's a good trade setup. It is. I personally wouldn't take this over USD Chef. I wouldn't take it over EUR Chef. I wouldn't take it over GBP Chef. the pip counts are different. That's almost 200 pips. So yeah, those are all good trade setups in my opinion. I just think the Cash Chef has a weaker pip count. Does that make sense?
Okay, I agree with that. Oh yeah, for sure, 100%. I didn't look at all the chefs. I don't have all the chefs like in my favorite. When I scroll down my
Yeah, I feel you. I'm just you know, if I'm trading a chef pair, really the best one in my opinion is GBP Chef. It moves more in my opinion. But whenever USD Chef does move it moves pretty good. But if I had to choose a chef pair, GBP Chef would be the best moving one.
okay, yeah, I don't know nothing about that, so I'll take your word.
All right, so somebody said Chef JPY? Let me see Chef JPY. I think Chef JPY is an opposite direction trade. Yeah, it is opposite direction. I personally don't like this, not that I have to like it, but I I liked it last week better than this week, and because they had this long order block, I think it's going to continue to go south. But I think this is, to me, a trickier setup than other. But 253 pips available to us is pretty good. I would look for the trade to buy back up to this area and then catch a sell from this area. So if you have that type of patience, or if you understand how to do that type of analysis, then I would say cool. But if not, like if it doesn't buy back up, like take the liquidity off this daily candle, I personally would just trade something different because of what it's offering from right here. We'll just call it to the middle of this zone is 250 pips, and it would have to fall straight to the zone. I'm not in love with the setup. I can see why somebody would call for this setup, but I personally think there are better trade setups. I like EN better than this. I like GN way better than this. But anyway, if I was trading the JPY, I'm going to trade UJ first, GJ second. Just personally. All right, who had this trade? Who had Cash Chef or was asking about Cash Chef? Nobody. All right, let's talk about my carry trade, yo. All right. So this is the moment we all waiting for. Now I'm interested in this USD Mexican trade. All right, because it seems like all of the fun and games are working themselves out. At this point, I can kind of target an area that I am interested in taking the sell from. So for me, man, what's going on? This is not a ray. Okay, because of the interest rate situation, this will be a carry trade, which means that they'll pay you to hold this trade. If you're selling it, right? So for me, I'm not gonna buy it. I would wait for this trade to get to this imbalance, right? And I'm just gonna go ahead and set me an alert because I will forget. In fact, I'm gonna set my alert here. All right, so this trade is kind of self-explanatory. I think we kind of discussed this when we came down, we broke this structure. Now we bought back up into our zone and we rejected. All right, so now that we've rejected, right, and it's clear that the dollar is selling, once this pulls back up into our imbalance, we can look to get short. And what I would look is to short this thing down for a for a great distance. Obviously, smart money would trade back to the bottom of this structure. I'm just looking at the possibility of us going to this imbalance. So you can hold it with confidence to the bottom of this structure, but I'm aiming for this imbalance here. Any questions on that?
What time frame was the imbalance on?
On the 4 hour.
Well,
4 hour, 4 hour. And this would be a trade that, you don't have to try to get like 5 or 10 lots on it. You can just start with what you start with, and we'll be able to add to this over the course of weeks and months as this thing falls down. But I think we're at a point to where we can kind of look for it to start descending. And I think for the dollar dominance, I think we're starting to kibosh that. My Solana trade finally got off the ground, y'all. Woohoo! I think hopefully my Solana trade will power past these highs right here. And I think it will. I think it lines up with the rest of the crypto. I was kind of worried about the 3-month chart, but last week when it got up off the mat, I felt a little bit better. I didn't have the gonads to buy any under the $100 mark, but it is what it is.
Some under 100 taught. It was a no-brainer.
You say you got some?
Hell yes.
Hey, that's if I was rich, I'd have got it too. I'll let in a doctor.
Excuse me, Todd.
You said what?
Can you go back to the Mexican thing, please?
Elfie, this USD Mexican trade ain't for the faint of heart. What's up, Shotty?
So you say you put your alert where?
In this zone, right before it gets to the imbalance. On the 4-hour chart, there's an imbalance. Right? In that 3-week order block, there's an imbalance.
Yeah.
Right? So
Okay, thank you.
right in this area, right past these relative equal highs, I think it's going to turn around. I have my alert right before it gets to these equal highs, just so I can kind of pay attention to it at that point.
Yeah. Okay, thank you.
Yes, ma'am. Now, the thing that's weird or different about this some days it moves a lot and other days it doesn't move very much. So once the trade kind of gets in this area, you kind of have to watch it, so that it doesn't get away from you. And I don't know what your particular broker charges. This is an exotic pair, so it's going to cost more to enter this trade. Like as far as the spread is concerned. Everybody's tracking?
Mm-hmm. Okay, but you did say it's gonna pay you if you held it for a long term, but it's gonna cost more.
It's going to pay you every day. It's going to pay you the swap fee.
Okay.
So, ideally, as you build your position, over time, maybe you'll have a lot and a half. You know what I'm saying? And you're getting paid not only for the swap fee, but you're getting paid because you're up. You know what I'm saying? So you're holding a winning trade and they're paying you every day. You can't beat that. Especially if this lasts for months. That's the same thing that happened to the JPYs when we first started. When we came into trading in 2020, or actually really in 2021, it really ballooned. But that's why those JPYs went up for all those months. Is because the big wigs were doing the same thing. They were just buying and holding that trade because the interest rates were jacked up.
Got you.
Todd, are you gonna buy that trade up?
What's that?
Are you gonna buy the USD max up to your?
No, I'm not buying it. I'm not going to buy it.
Okay.
Again, this is an exotic, so you're going to pay more to get in the trade, and you're going to pay you're going to be on the wrong side of the swap fee if you buy this up too. So you're going to win the trade, but you're going to pay the swap, and then you're going to have to pay more to get into the trade because it's an exotic. I don't know how that all works out, but we have regular trade setups that look the same way this does. That's not going to screw us. You know what I'm saying? So I would just trade the regular pairs. And then once this is ready to sell, you hop into this one because it's going to pay you the swap fee, for the foreseeable future. Somebody, I think Aiden on the call? No, Aiden ain't on the call. I think he was talking to me about this nasty trade yesterday. But yeah, I don't mess with this pair. But did anybody trade Euro GBP?
No.
No.
Kai, don't lie. I know Kai posted it too, so I was just wondering. But
I did not, sir. I did not take your GBP, but I could have. It's sold.
Hey, yeah. Anyway, it's it needs to come down another level, I think. But yeah, if you trade this trash, it does have a 3 order block, but it has a lot of wick. So them 10 or 15 pips that it moves every day, it's just kind of brutal. All right, do I have any other questions? Please post.
No, I think we're good. I think we're good, man. I think we're getting better and more confident. Like you said, just the entry for real.
Yeah, I think it is the entry. I get more questions about people's entries than anything else. And
Yeah. It's just the entry in their heads people be struggling with.
well, listen, to me, I think it's the attitude when you approach the hedge. I talked to Delaney this weekend. And
Yeah.
I got the impression that there are two things that happen, right? People trade on their own, and you know, I can't. I have no vantage, but I can't view what you're trading. When you start taking trades on your own, and then you take the trade that I call, and you're in a hedge in the one that I didn't call, and I don't know. Like all that's problematic, which is why one of the rules is only take the trades that I call. If you get caught in a hedge that I call, I'm going to get you out the hedge. So it shouldn't affect you negatively. But I think the more that we do this, I think people understand how you can use the hedge to your advantage. There are two ways you can get out of a hedge, right? Once that position is hedged and you're ready to take the trade in either direction, you just open up a whole new position going in that direction. That's one way to do it. Or you cut one piece or one part of that hedge, whether it's the buy or sell, to go in a certain direction. But the goal is always the same. Once you're a hedge, once the equity comes back to where it was, you just close all those positions, right? You just totally close those positions and you're done with that trade. You're back to break even, or you've taken the trade, as far as it's going to go. But I try to talk people through that. And when we got caught in that UJ hedge, it was relatively straightforward. It was pretty easy if you just took the trade. So I think the people who didn't have other things going on didn't have a problem with that. And I think the people who had other things going on kind of got caught up. So you just have to, as a trader, you have to make the decision to stick to your one trade, or you're gonna have to trade two different accounts to take, the 16 trades you're trying to take and the one that I call. So that's as straightforward, as we can get on that. But I'm still gonna say the less that you trade, the better off you're going to be. It's not going to work the opposite direction. The more you trade, the more chances you have to get jacked up.
No, I agree, because I took a trade on Monday, then I got caught in the hedge on Tuesday, and I closed it all. Since I won on Monday, I just didn't trade nothing else. I was like, forget it, the week done. So I didn't get any other trades that you had called. Because it didn't make sense to.
Yeah,
I already won.
There you go. I would if you have a winning trade that week, I would just roll it to the next week. It's a lot less stressful, and it's a lot easier in the long run. All right, please, y'all have y'all's markups. Drop them in the chat, and we will pick up some wieners this next week. Oof, that go, boy, God. Is everybody good?
Yeah, Gold been buying, boy. Gold been turning it up for a minute.
Hey, somebody said let's talk fundamentals. What do y'all want to talk about fundamentals?
How the tariffs and everything else that's Trump is doing is affecting the markets.
You said how's the tariffs what?
The tariffs and everything else Trump is doing affecting the markets.
I mean, it's the reason why you're getting all that volatility. It's definitely weakened the dollar. which is what he wanted to do. So, I think you see everything playing out, in the markets. You're getting the bearish order blocks for the dollar. So long term, you're going to go lower on the dollar. That's what all the charts are pointing to, and that was the objective of Trump. And maybe his means were a little bit weird or different, but the end goal was always to have a weaker dollar. And because he couldn't bully the Fed into doing it, he chose to do it his way. And at the end of the day, we're going to get the weaker dollar. I see another question about GA. GA has a bullish order block on the daily, right? Is that what you're looking at, Mike? GA is going to sell first.
No, it was the I think the previous week's analysis. It was supposed to go down and come up.
It's still going to go down and come up.
Okay.
I'll do a video on GA, but it's still going to go down and come up.
Okay. Okay.
I think EA is the same. But I would, if you're not already in those, I would it's going to go down and come up too. But there are better setups with the fresh order blocks outside of GA and EA. I don't know that there's a better setup than GN as far as pip count, other than the chef pairs, but it's kind of a complicated analysis. So this is a 1 week bullish or bearish order block that we never pushed up to. We pushed down first, right? We pushed down, we took the liquidity, we tapped in, and now we're going up. That's going to be like a 400 pip trade or something, or 600 pip trade. But in terms of payment, payment wise, that 600 pip trade is not going to pay you what that USD CHF trade will pay you, because the CHF pays double per pip than the NZD. Does that make sense?
Yeah. Did you take a look at GU and EU?
Yeah, they're bullish. They got bullish order blocks, so they're going to pull back. I would rather y'all do y'all's analysis. I mean, these are straightforward on the 3 week charts. So these are easy analysis that you could do, and you can post them in the chat. That way I can see what y'all are thinking versus me doing the analysis on every pair. I don't mind doing the analysis on on that GN pair, because GN is not a straightforward pair, or not a straightforward analysis, because it has a lot of wick or whatever. But on pairs that are straightforward, that have the full order blocks, I'd rather y'all knock those out. Those are easy. And if everybody gets to the point where they only, if you look and you see this and you say, I think this is going to sell, but it's probably going to buy first, or I think, or you don't know, and then you can pull up a GU trade where you say, man, this is going to sell, and you just take this trade because it's the easiest trade, it's the low-hanging fruit, you're going to be a better trader and a richer trader in the long run, because these are straightforward, easy analysis. The only thing you're waiting for is either the liquidity to get ran, or some internal liquidity on a lower time frame, some internal highs to get ran, and for it to push down. But in my opinion, these types of trade setups, your ability to choose these types of trade setups is what's going to dictate how successful you become as a trader. Because there are some charts that are that are harder to read. They have more noise going on than other charts. And if you get in the habit of picking the ones that don't have noise, or they're the easy, straightforward trades, you're gonna give yourself a level of longevity that other people aren't going to have, because they're going to get caught up in 50-50 moves or 50-50 trades. So I think everybody has been doing good as far as dropping their analysis. We'll keep doing that. And if you have questions, the important piece to me is ask your question. And ask your question in the chat, because 9 times out of 10, somebody else has that same question, but they don't have the confidence to ask. Does that make sense?
Yeah.
Good, folks. The New Zealand dollar is getting off the mat. Everything is getting off the mat against the dollar. Every pair is got that Jack and the Beanstalk candle against the dollar. And that really says something when the AUD is stronger. It's getting stronger against the dollar, huh, Sean? The AUD is getting off the mat against the dollar. The AUD is a horrible currency.
The only worse currency is probably the Zimbabwe shit.
The dollar is now, this got off the mat against the dollar. So,
But a weak dollar is good for the world. So,
well, I agree. I mean, it ain't good for expats, but you know.
well, I mean, you guys are rich anyway, so it doesn't matter. But the world's economy should do better with a weak dollar. So
Jerome said he's staying on for a second term too.
Trump is firing his ass.
I thought they said Trump couldn't fire him though. He appointed him. Can he fire him?
Well, he can't fire
He's
him.
not going to re-up him.
Yeah,
Same thing as getting fired. You know, when his term ends, he's not going to re-up him. He's going to appoint somebody else. So he's effectively getting
where's
fired.
the text that you sent me, Tom?
I think it's in the WhatsApp.
I know, but my phone is jacked up. What did he say? I can't wait to fire him.
Let me look. Let me look.
I can't wait to get terminated or whatever. Yeah, Trump don't like that dude. And for a minute, you know,
it's not in the WhatsApp. Maybe I text it to you straight up. Let me see.
Yeah, but for a minute, I thought Trump didn't know what he was doing.
As far as what?
As far as with them tariffs and without, all he was doing was shaking the confidence out the dollar.
What do you mean?
Huh?
What does that really mean, though? I mean, I don't know where I sent that thing to you because I don't see it in either one. But
it means that he did exactly what he said he was going to do. Remember, he said, "If you don't want to lower the interest rates, I'll do it myself."
Well, I hear you, but what I'm saying is, yeah, the confidence is out the dollar, but you know, if I'm the rest of the world, I'm not coming back and buying.
Well, I'm not
American shit. You know what I mean?
But
I can't trust him.
I think Trump's goal was to get the dollar weak first, and then do business after that. I don't know. I'm not a.
Every time we do business, Watu, you renege on the business. You know, like
I agree. I don't disagree with you.
I'm just saying I don't know why they would do it. You know, I mean.
Well, because apparently America has something that everybody wants. You know, I don't know. I don't know what it is. I've said for years, I don't know why the world bows down to the U.S. other than their military. But it's easier for
I,
it's
I
easier
can
for
see
us to say.
before because we might be kind of brash and loud and asinine about stuff, but at the end of the day, if you're keeping your word on shit, on financial shit, then I probably can live with some of the other stuff that really doesn't matter, in the long term. But once you start reneging on everything, then
So maybe Trump called all those world leaders before he started acting a fool. I don't know.
maybe he did. I mean, I don't know either, but I mean, I would hope so because, like I said, if he didn't, if I'm the rest of the world, like as an example, all this trade deficit whining that's been going on. I mean, the agreement way back in the day was we'll export dollars to the world and the world will export cheap shit to us. That's what allows people in this country to buy houses and cars and everything else with cheap credit.
live large
Because
to overlive.
right, because the dollars they exported, the world turns around and buys our bond market, which keeps the yields down, which allows everybody to have reasonable interest rates on credit cards and everything else. But if you want to whine and renege on all that stuff, then I'm not buying your fucking bond market. And y'all can have, 20% interest rates over there. Good luck buying your houses and your cars and using your credit cards in that environment. So, I don't know. Maybe it was all orchestrated. If it wasn't, if I'm the rest of the world, if I'm China as an example, and really Europe too, and I wouldn't be buying the American bond market. I would put my money in Bitcoin or gold, in which, speaking of gold, that's why you see that chart looking like that. Somebody's been buying the shit out of that. Probably China, maybe the whole world, but somebody's been buying it.
I agree. But you can't tell me that Europe wasn't in on this. Can't tell me that.
Japan is another one that's a big buyer of our debt. So I don't know. I mean, I hope they was in on it. Otherwise,
There's no way Europe wasn't in. There's no way Japan wasn't in. There's no way they didn't know beforehand. Me and you didn't know. We was wondering what the heck was going on, but there's no way those countries weren't in on it.
Well, God, I hope you're right, man. I hope you're
Well, hey, I hope I'm right too. I hope Trump ain't that dumb.
Otherwise, I'm gonna be stuck with my fucking houses. Will not be able to sell.
Otherwise, I'm gonna be over here paying rent like, geez, man, the Colombian peso is expensive. Man, $10,000 for rent, man. Come on, man.
That's how it is. Well, I don't know. Because the other thing that's off right now is, weak dollar usually means strong markets. But because everybody's scared about the tariffs, markets have been going down with the dollar.
Well, I think they gotta go down a little bit, but I think they'll start raising up after next week or whenever after the dollar makes its brief pullback. I think the markets will start rebounding.
I do too. But the point I'm making is at some point they have to, or maybe we need to start discussing the S word.
Let's see. Well, all I know is old girl been buying eggs by the 30 counts over here too. I've never seen nobody eat this many eggs too.
Well, Americans are jealous, and Leandra Jerome's not cutting them rates, because
Jerome said he going home anyway.
Yeah, he's not cutting the rates because he thinks that shit is fucked up because of the tariff talk.
Andrew Jerome said, you and Trump can suck an egg.
Believe in an expensive American egg.
Yeah, not these dirt cheap 30 count Colombian eggs that don't need to be in the fridge. I've never seen milk and eggs that don't need to be put in the fridge.
What was the question in the chat?
You would have to cut 2 more times this year. Who said that?
Oh, I mean that's the talk. That's what the market's think, and you probably will get cuts
Yeah, later on
at
in the
some
year.
point
Like
this
the first,
year.
yeah.
You know, I'm talking about more immediately. I mean, I think if things keep going the way that they're going, something's going to break. Somebody's going to get squeezed and margin called, and it'll threaten the system, and he'll have to come in and cut rates and print money. So yeah, eventually, I mean, that's what always happens. But until that happens, I don't think he's cutting rates.
Especially with all the trash that Trump keep talking about. Like these dudes are a little bit prideful at the end of the day. You can't be talking
What
about
Trump
people's
said,
money.
you can't fire the dude fast enough.
Yeah, like these dudes still have some pride. They got kids, you know what I'm saying?
Mhm.
They ain't fix to just talk trash to these dudes.
Man,
Everybody's not gonna be a Ted Cruz. You can talk about their wife and kids, and they come back and still think you're the greatest.
Hal said last time after the interest rates that they might cut more than they expected to this year, more than twice. So they might cut 3 times.
I know what you said, but
And then
have you heard Trump talking trash about him? Like in the
no,
past?
I don't live in America, so I didn't see a lot of that.
Oh my
And I
God.
don't look for it. But his last meeting that Powell had, that's why the market just crashed because of what he said. Because he said basically he's just waiting because the effect on the tariffs hasn't come through to the data yet, and obviously they're data driven. The Fed is data driven, so that's what he's trying to keep to, and he's trying not to scare everyone like there is going to be a recession, and the tariffs are going to affect the market how it's looking. But he basically said like we're waiting for the data to come through. Unemployment, he said, is good at the moment. Interest, CPI is good. We're at where we want to be, which is 2%. But then the guy asked the question, well, we're at 2%, but everything's still expensive. So that means, it hasn't really worked. Are you going to change this whole 2% rule? And he was like, well, we're looking into it. So basically, he just said that the 2% is just a thing that they just say. It's a thing that they just say they need to get down to 2% because he knows that over time, interest rates are going to go up. Inflation is going to happen. So you can't get around inflation in life. It just happens. Over time, over years, inflation happens. Prices go up, and there's no way to change it. So this 2% thing is just like you got to live with it. You just got to earn more money and just live with it.
You can get around it.
How? What? Learning how to trade.
Not printing money.
Well, yeah, just have to get just earn more money, like, and just kind of
stop printing money.
Stop printing money.
Yeah, if the government stop printing money, you won't have monetary debasement, which is, a form of monetary inflation. That's the chief cause of it. That's why we could buy shit for cheaper than you younger folks can. That's why our parents could buy shit for cheaper than we could, because the governments print money. It's like, a stock. If I have 500 shares of stock and they're worth $1, and then I dilute the market, I create 500 more shares of stock and dump them on the open market. Now everybody that owns my stock, their shit's worth 50 cents. It's no longer worth $1. That's essentially what happens when they print money. That's why, the cost of stuff nominally appears to go up because it takes more of that denominator, that dollar, that euro, that whatever. It takes more of those to buy it. It didn't really get more expensive. You just diluted the power value of what you're using to buy it.
Right. Mm.
And
That's why
Trump
the
has
stock
been in,
market is up and to the right. That's why they tell you, oh, it's going to go up over time, because it fucking is, because they keep printing money and we value those equities in money. That's why Bitcoin has gone from 0 to 85,000 or whatever it is, because it's hard. There's a finite amount of it, but we keep printing more dollars and the world keeps printing whatever y'all use. So in everybody's currency, Bitcoin is more and more dollars, euros, whatever. But if you think about it in the reverse, back in 2018, I paid $3,000 for a Bitcoin. At that time, if I wanted to buy $100,000 house, it would have cost what, 33 Bitcoin roughly. Today, if I want to buy $100,000 house, it'll cost 1.2, 1.3, whatever the number is, Bitcoin, not 33. Because you're dealing with a real asset, a hard asset. So if technology and all these breakthroughs are deflationary and they're supposed to make everything cheaper, how come shit doesn't get cheaper? It does when you measure it in real assets like gold or Bitcoin, even equities, But when you measure it in fiat currency, it always gets more expensive over time because fiat currencies get debased.
on purpose. It doesn't
Yeah,
happen
they
by
have
accident.
to. That's how they inflate that debt away. Every country is in debt. That's how part of the plan is to inflate the debt away. That's why they don't run on tax. No one ever proposes raising taxes. Why? Because they figured out a backdoor way to tax your ass via currency debasement. Because no one's gonna vote for the guy that's raising taxes. And nobody has the run on it because they just tax you through the back door. Most people aren't smart enough to understand that they're being taxed.
And that's why they voted the dude in who spent the most, who debased the currency the most.
That's why, there's a train of thought, and the Europeans are smarter than the Americans, in my opinion, on this. But there's a train of thought that says that corporations that make, I don't know what the number is, call it $50 million a year, whatever the number is, the high threshold. Once you make X amount of dollars, everything over that, you should tax them at like 90%, on the dollar. And the reason I think that you should do it, and I agree with it, is because when they print money, they don't send everybody a $20,000 check, and say, we debase the currency, here's your $20,000 check. When they print money, they'll give it to the financial institutions. And they take it and buy back their stock and loan it out to people for, crazy interest rates and so on and so forth. So what happens is we all get to pay for the money being printed via a backdoor tax, and they make record profits, et cetera, and they keep all the money for themselves. So when they over leverage and fuck up the system, they print money, which we all get to pay that tax. But when they get that money and they make record profits for the next 4 or 5 years, however long it is, they privatize those gains. So, but the people in general are just too stupid to get it. So when someone talks about taxing these people at the way they should be taxed, they're like, oh no, they shouldn't be taxed. They shouldn't be taxed. Why should they be taxed? Because we're all getting fucking taxed. And they're privatizing the gains, dumbass. That's why. But again, when you're dealing with people And in America, most people are stupid. I hate to say it, you know, but when you're dealing with people that are stupid, that lack intellect, that won't go do any work to better themselves, this is what you get.
But then,
agreed.
and then when you try to tell them, like when you tell them on the internet, they still don't get it. When you have a conversation with people and you tell them they privatize the bailout money, they don't understand it. They don't understand how a company buying back their stock helps the company, but doesn't help the people. Only if you own shares of that company do you gain from it, but they don't understand it. They don't understand just the same way we had to bail out all those automakers after they sold us lemons for years. And the government gave all of them a bailout check. They didn't give it to the people. They gave it to the auto companies, the same ones that sold you lemons for years. And then those auto companies come out of it, you know, and they get to revamp their program on our backs. And if you didn't own that company, you know, you didn't get any of the gains. So, you know, people who don't invest, they will never understand. And even if you try to break it down to them, I think most people don't have the mental capacity to discuss finance. I think they kind of have a block towards it. So, you know, I just don't know if there's a way around it.
Education, just got to keep on learning.
Education is not going to fix the masses. The masses aren't educated. Y'all haven't talked to people, like just regular people,
about the
anything.
situation in the financial market.
Yeah, what is their answer? Like what do they think about the policymakers? What do they think about, you know, most of the time when I have a conversation, the first thing that people bring up to me is you know, Democrats or Republicans.
Asking you if you're Democrat or Republican?
You said what?
Asking you or trying to see if you're a Democrat or Republican to see where the conversation's going to land.
Well, they want to blame one side or the other, right?
Okay.
And look, that's a cute argument, but at the end of the day, it's rich people against poor people. It's the haves.
Both parties do the same shit
and the have-nots. When Trump spent $8.8 trillion, Biden didn't save. He didn't spend a half of a trillion. You know, he was 5-point-some trillion. It's the effects are the same, or they're very similar. So instead of arguing about what side of the aisle you're on, you know, like you have to learn how to gain the same way that they gain. You have to be invested. You have to have assets. I mean, you have to learn how to trade. Whatever the case may be. It doesn't do me any good to argue, you know, whether you believe that women should run track with men or not. That's semantics. And you know, I don't agree with trans athletes running with the other athletes. I get it. You know, that's just my personal preference, but it's not helping me eat. You know what I'm saying? So all I try to tell people is you have to understand the nuts and bolts of finances. And you can't stick your head in the sand and hope some politician is going to come save you. It's not going to happen, man. Like, listen, you're a trader. If you see a good trade setup, you're trying to take advantage. You're trying to over leverage. The same way the politicians, they see great trade setups. They see ways to get rich. They're going to take advantage. They're not fixing to pull your coattail because you're dumb. They're not going to pull your coattail to the fact that they're getting rich by printing money and taxing you or allowing you to pay the high egg prices, and they go into the bank on the trade. It's just too easy. I mean, I'd rather you be dumb and poor and I make a whole bunch of money and I can send money to the people in my family or whatever. You know what I'm saying? That's just how it works. But if I personally vote against my own interest, that's half the issue, right? Like I'm a retired Army dude. I'm not voting for people who are going to cut my benefits. I'm just not doing it. Now, at the same time, even if I vote for people who aren't going to cut my benefits, I'm still learning how to trade. I'm still learning how to buy assets, what a real asset is. So when they inflate, like I know they're going to do, debase the dollar like I know they're going to do, that I'm going to gain the same way that they gain. That's what we're saying. Like, look, man, you still have to position yourself. You still have to buy real assets. You still have to buy those index futures or index funds, or buy the US 30 or whatever. You still have to do that. You have to be in the game. If not, inflation is going to tear you up because you can't grow your money faster than they debase it. You just can't do it unless you know how to trade, or unless you know what to invest your money in.
Because the hurdle rate is about 12%. And basically what that means is they debase the currency at about 8% a year and call inflation 3%. So that's 11%, 12%, depending on where inflation is. So going into the game every year, just to tread water, you probably need to make 12% extra. So the question that I would have is, I got a job, I make pretty good money on that job. Can I go in there tomorrow or January 1st, December 31st and say, hey, I need a 12% raise? I can, but they're not going to give it to me. So where can I make 12%? Maybe the stock market. The last 2 years, if you had your money in the S&P, it was up, I think, 28, 30%, something like that, over the course of the past 2 years. But so far this year, it's down. So this year, I mean, I don't know what the back end of the year entails, but you might not make 12% this year in the S&P. So where can you make 12%? Over the long haul, if you average all the years together in the S&P, I think it returns something like 7 or 8%. So you can't really make it by sitting in the S&P. You'll do better in the S&P than you will in a savings account. But you're still, if you just left your money in there, you're not going to keep up with the rate of debasement and inflation. Now, if you're good enough to strip out the bad years, you can probably return closer to 25 or 30%. And if you know how to read a chart, you should be good enough. But again, mistakes are made. So anyway, the question always to me is, if I know the hurdle rate is 11 or 12%, where can I get that? And for me personally, Bitcoin it outpaces the NASDAQ, the S&P, the US 30, gold. It outpaces all of it. And that's why I always push Bitcoin on everybody to their disgust and dismay, I'm sure. But that's basically why. Because when you average out Bitcoin's return, it's like, I don't know, it's a little over 100% a year. And that's factoring in, the 80% drawdown that you get every 4 years.
No, understood. Well, where are we now in the market cycle? Recession.
Hey, Shad, don't tell her. Hey, let her listen to Rob Powell. He'll tell her.
I think I think we're in basically what I would call what they would call an air pocket. I think we're still going to see the price appreciation in the assets. I just think it'll be probably in the fourth quarter of the year. So I mean, They say this is a similar thing happened in 2017 when Trump took office. So,
Where's
you
the
know, what we
ISM,
do,
son?
huh?
Rob Paul said, look at the ISM. Where's the ISM?
Last time I looked at it, it was right around 50, you know. But yeah, the ISM is something that I follow. Um, if the ISM is going up, you know, anything below 50 feels recessionary. I think once you get down to 46, you're definitely in a recession. But the one feather I just hold in my cap, and the reason I don't really stress or worry about it is at the end of the day, the United States has to refinance $7 to $10 trillion this year. So as far as I'm concerned, I know money's getting printed. Whether it happens now, next month, October, November, my bet is money's getting printed. And when that happens, asset prices will respond.
Thank you.
You're welcome. Because interest rates really don't matter, you know, or they matter less than liquidity matters. Um, and if you think of it in terms of if you live in your house and you have your job, you get paid every month on your job. Well, the country gets paid every month via tax receipts. Okay. So let's say you got a bunch of credit card debt, 100,000 pounds of credit card debt, but you only bring in, I don't know, you make 50,000 pounds a year. So you can only pay the interest on that credit card debt. You can never pay into the principal unless you make money. So eventually over time, the interest payments overwhelm you if you don't get a pay raise, or God forbid, if you lose your job, you know, how are you going to make the payments? How are you going to make your rent payment or your mortgage payment? You know, if you have a credit card, you can maybe make it with that because you have space or room on the credit card. But if you don't have space or room on the credit card, what if I came to you and I said, Leandra, I'll give you more, I'll extend you a line of credit, but I'm going to do it at 50%. You don't want to do it at 50%, but if that's your only offer, you're probably going to do it because you need the space first. You care about the space first and the rate second because you don't want to be on the streets. Well, that's how the countries are with their debt. They need the roll or the space first, and the rate is second. And that's why the markets, and you can go see it on the chart, if you go back to like October to December of 2022 to present day, markets have gone up. Why? Because liquidity was injected into the markets during that time, making the markets rise. And most of that time, interest rates were either being risen or they were being held. They were not being cut. So that tells you right there that the space or the liquidity matters first over the interest rates. If you get the interest rate cuts, then that'll be like some jet fuel. You'll probably get a better behaving US 30, a better behaving Russell 2000. You know, those companies that rely on credit, the ability to be able to go out and get cheap money, you know, cheap loans to hire people and run their business. Those businesses will probably come back and perform better once Jerome gets on the good foot and starts cutting them rates. But your tech companies that, you know, they're way in the black, they don't really need loans, et cetera, to run their business. They've been performing the whole time because they aren't interest rate sensitive.
Yeah, thank you. That makes sense. Makes a lot of sense.
But if I were you, I'd start layering some money into Bitcoin. I mean, that's where I would be saving my money because as long as we're going to print money, it's going to go higher. It's going to go to 500,000, a million, 5 million. As long as we're printing money, that price is going to continue to go higher. It's like looking in the mirror, the inverse of the dollar. And gold really is the same way, but gold doesn't behave the same exactly because the price of gold gets manipulated through the futures market.
Mm. I see it in the charts on Bitcoin, definitely.
You can see it in the S&P and the NASDAQ and the Dow Jones too. All those charts bottom between October 2022 and December 2022, and they started going up in January 2023. All of them.
Oh yeah, I've seen that. I marked that up on the charts and I've recorded that. I've seen that.
So the question to anybody that wants to question liquidity versus interest rates is what was happening with interest rates during that time? We know they weren't being cut. So why do all those charts move up?
It's a trick question. Well, that's not answering.
It's not a trick question. If you know rates were not being cut, what pushed those charts up is liquidity, easing of credit conditions. That's what pushes the charts up. Dollar debasement nominally pushes the charts up. As I debase your euro or your pound or your dollar, the price of an asset will nominally move up in value. What happened prior to that 2022 bottom, say from January 2021 or January 2022?
Zero interest rates.
They hiked them, right? When you hike a rate, it strengthens the currency, right?
Yes.
What happened to those charts? Dollar gets strong, chart price go down. I'm sucking liquidity out of the system and I'm strengthening the dollar. Chart price go down. That's all that's going on here. The dollar or your pound or whatever the fuck they use, I just look at it like looking in the mirror. If the dollar's getting stronger, then those asset prices should be moving down. If those asset prices are moving up, that must mean the dollar is moving down. Now currently we know the dollar has moved down, and we know that the asset prices has moved down also. So I gotta think that the asset prices are going to start moving back up because the dollar has moved down. I think the asset prices have moved down with the dollar because everybody's scared about tariffs and shit. Eventually, the tariff bullshit is going to shake out and there's going to be certainty, or those asset prices are going to fall to a level. And I personally think they already have. They're going to fall to a level to where they're just cheap enough. And no matter what they say about tariffs, people are just going to buy the shit.
Yeah.
Because if you draw a trend line, if you pull up the S&P or the NASDAQ, the S&P is probably better. And you draw a trend line back from like 2018 up until present day, you're going to see that this most recent price dip in April came right down to that trend line and bounced the fuck off of it.
Mm.
That's the bottom.
Mm-hmm.
And that's how many year? A 10-year, 8-year trend line? That's the bottom. If you believe that we're still in a bull market, that's the bottom. That's why we had that big ass 10% candle. You know, that's a big ass candle. And you know that we got to retrace that candle. We got to dig dance around on that candle, fill in fair value gaps and everything, you know. So the up move on that candle is so big that you can have some big down moves that'll feel like, oh my God, you know, is the bottom in, you know. But yeah, the bottom probably is in, but you know, you can there's the candle's so big, there's a lot of room for up and down action. And interestingly, we're in April, May, June. What usually happens in the summertime? Chop consolidation, nothing, you know. So they give us that big ass candle in April, a 10% candle or whatever ridiculous size candle that was in April as everybody goes away in May, right? So what's price likely to do? I mean, I could be wrong, you know, but my guess is we chop around inside that candle all summer long, kind of like we did with Bitcoin last summer, you know, and then October, November, you know, when they all come back from the Hamptons or y'all come back from Italy or Spain or whatever the hell it is y'all do over there, you know, and then price probably starts moving up. That's my guess. We'll see how it plays out.
Mm. We'll see. I do see it going down a bit more there. I don't think it's finished yet.
But if we close below that trend line, I got to think that all of my theories are off the table. If we close a candle, you know, below that trend line, we can wick it, you know, and close above it. But if we close below that thing, I gotta say, I might have to go back to the drawing board on some of my assumptions.
We're 475 on the S&P. On the S&P.
Yeah, I don't know the price level because I don't have it up. But if you drew that trend line starting like back in 2018 to 2020 to 2025, you know, touching all those lows that have come down, that kind of diagonal trend line. You know what I'm talking about?
Yeah, no, I'm doing it now.
Yeah, so the most recent April 2025 low that we came down, I don't know if it was April 7th or whatever the day was here within the last couple of weeks that we made our most recent low. That would be the last touch point on that trend line. And what I'm saying is if we go back to that trend line and we close, I don't know, a daily, a weekly candle below that trend line, then we might be in some trouble, and I probably might have to rethink, some things. But my guess is that we won't close below that trend line, and that low was the low for this cycle.
Mm. I'm looking at imbalance. You can feel below that trend line.
Because if you drew, you see that cup and handle formation on the S&P?
On what time frame? Which time frame?
You can probably use a monthly time frame. And if you start at the top of the cup at, like, I don't know, say January 2022, and then price moves down and bottoms like between October and November, or October and December of 2022, and then price moves back up, forming your cup. And at some point,
2023, yeah.
right. So if you drew a straight line across the top of that cup and you intersected it with that diagonal trend line.
Yeah, I've got it. It's my
That's about where price came down, right?
Yeah, I've got it at a.
So to me, what likely has happened is
got that as a 2-week, my 2-week TP.
Say what?
2-week TP. That's what I've got, because I've already got that trend line there.
Yeah.
So that's what I'm saying. I feel like it might go down further, but we'll see, because on the daily, it's got a bullish order block, which I think it's pulled back into already to 50%, but I'm not sure. But it's still got imbalance in there.
The way all that stuff lines up on the chart, I mean, it seems pretty significant to me, so, it looks like all we did was we went through the old highs, we went up, we broke structure basically, and then we come back to retest.
Yes.
And we're going to go high. And a lot of the indicators that I like to use, and the smarter people than me that I follow, think it's going higher too. And from what I know about market structure and the way price moves, break and retest, all that shit, my guess, I could be wrong. My guess is that we're going higher. All that's happened is we're on a big ass time frame, the monthly chart, the 3-month chart, whatever chart it is, top price is fractal. What happens on the 1 second happens on the 1 hour, happens on the daily, the weekly, all the way up. We've went up, we broke structure months ago, a year ago, however long. We've come back, and now we're retesting.
I know it's going to go up, and I would have liked it to break that high at 4728, or even 4.
Can you share your screen?
I'm on my phone.
Okay, you can't share it on your phone? You're supposed to be the tech guru.
1 second.
Don't tell me that you're a boomer at heart.
You see my screen? Hello?
What'd you say?
You see my screen?
Yeah, I see it. Go pull up the S&P. It's kind of the best one.
Yeah, so if it breaks this high at 5794, well, I was hoping it would fill this gap in price last week.
I think it's going to probably fill it, Sunday, Monday, Tuesday of this week. Like right now, to me, price is in the middle. It's either going to go up there and fill that gap and sell off a little bit, or it's going to move down first and take some liquidity lower, maybe fill that imbalance. I don't know, and then it'll go fill it. But I think, judging by those dollar charts looking like they need to buy, that price moves up earlier in the week, fills that gap, and sells off.
Because this is looking like a sell to here.
Right. Well, I think it can either move down there first and buy up, or maybe it moves up and fills that gap first. Because right now it's really in the middle. Kind of like how price consolidates, like before the FOMC or whatever. That's what it's doing now. You got that gap above and you got that liquidity below. And really right now it's in the middle. We don't know what it's going to do. But just based off of the dollar chart, I would assume that we're going to move up and fill that gap first. Because if the dollar is going to move up, then these assets should move down. So that's my guess. We'll see though, and that's the beauty of waiting for Tuesday for the trade, because it's going to give a move on Sunday and Monday. It's either going to move up or it's going to move down. If it moves up, then probably come Tuesday, it's selling. If it moves down first, and probably come Tuesday, it's going to buy.
Yeah. So a lot of opportunities, just got to wait and see.
Yeah. So, but if you switch, so this is the monthly chart. Okay. So if you drew a straight line, like across that 2021 high, if you drew a horizontal line across, just shot a ray across, it's going to intersect with that diagonal trend line about at the bottom of that wick. Right. That's not a coincidence.
US 30 is looking the same way.
Right. They all look the same. The NASDAQ looks the same too, Elfie. So my point is that's not a coincidence. So if you look at that, when price went up and broke that high, that 2022 all-time high, and went up to wherever it went, now it's just coming back to retest.
This one's 2023. It's almost 2023. That's
so we just had a break of structure and a retest. And that's why my bias is that we're going higher.
I agree.
Still waiting for that break of structure there on that daily. I need to see, not a daily, sorry.
What'd you say?
Yeah, I need to see it break above that weekly.
I hear you. Again, I could be wrong. I'm just telling you what I think. We'll see. But that place, that intersection of those two trend lines, I mean, that cannot be a coincidence.
No, I totally agree with you.
But typically, what happens with these wicks is price will come down and fill 50% of the wick. So Maybe that happens next month. I don't know. Maybe it happens over the course of all the summer months. You know what I mean? Maybe it comes down a little bit next month, a little bit more in June, a little bit more in July. You know what I mean? But 50% of that wick probably will get filled.
That would be
roughly at the top of that purple. I don't know what the hell that is you got on there, but that purple.
the gap in price. It's a gap in price.
Yeah.
That means there's a gap in price, which price or like majority of time comes back to.
Mm-hmm. So
ICT stuff.
isn't it interesting that you have your gap in price right there? And I'm saying 50% of the wick probably will get filled. You know, I mean, so anyway, we'll see what happens. But that's my guess. That's my theory.
Yeah, I'm just lining it up with a GAN box now. That is a move. So 50% is the top of that gap in price.
Exactly.